Laura Morrison, volumes have been low across the exchange, but action in ETFs remains hot. What are the most popular ETFs over at the NYSE right now?
Well, we represent over 95% of all listings in ETFs on NYSE ARCA. And I would say the more popular ETFs are those that wrap equities. They've consistently been the case over time, but the AUMs have grown significantly in the equity-based ETFs, particularly lately, international and emerging markets.
Well, that's surprising to me because I thought that we really exhausted almost every single index out there, but you had a whole slew of new listings last year for equity ETFs and this year. Tell me about the levels. What are you seeing the most of?
Yeah, so last year we listed a record number of new ETFs, 297 to be exact. This year we've listed almost 80 new ETFs in the first quarter alone. And for example, one of the more highly anticipated ETFs was the PIMCO Total Return Fund. Now that's not necessarily an index based, it's actually an active, but it's a permutation, a new different type of approach towards building an ETF. It's an actively managed ETF that is not index based, but has gained decent traction since March 1st.
What about leveraged ETFs? Because they've really been the scorn of a lot of journalists and people in industry who are afraid that individual investors shouldn't get involved with ETFs that offer 3 times an index or 4 times or 5 times or however many times an index.
We are the prevalent exchange for listing leveraged and inverse ETFs. However, we certainly do caution when anyone is looking into an investment to truly understand the risks that are involved by reading the prospectus thoroughly, by speaking to their financial advisors. Particularly leveraged and inverse ETFs, most of them are focused on a daily rebalance, which means that the investor should expect to receive the investment objective only over the course of a day, not over the course of time. So again, it's really important to take a look at the risks involved in every single investment that an individual or trader is looking to make and consider what those risks are as it relates to their portfolio.
And you said you've had a whole lot of new ETFs hit the exchange over the past 2 years. What's in registration? Because it takes a while for an ETF to go through the regulators to get listed on the New York Stock Exchange. So tell me what you're expecting over the next few years.
Sure. So we have a number of ETFs that are in registration. Basically, those that fit within our generic requirements, in other words, diversification measures that exist today on our rule book, can list on the exchange in a matter of a couple of months. But in what you're alluding to, the ETFs that don't fit within those generic listing requirements, maybe they're a little more innovative, but first to market and new, will take time because we work with the SEC on advocacy opportunities to be able to bring those products to market on behalf of our issuers. So they're closely scrutinized by the SEC. However, while we're bringing new ideas to the market, it makes sense for each of those products if approved.
All right, and is there a particular type of product that you're expecting? Is it going to be more commodity ETFs, more leverage? What do you expect in the next few years?
No, it's really more actives.
It's going to be the actives.
Yes, that's the pipeline that we're seeing. And a lot of that is coming from, frankly, mutual fund issuers who are currently very successful in that space, who essentially have determined that the ETF doesn't necessarily cannibalize their existing business, but it complements their business.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to